Hello, Warriors. How's everyone doing today? So I was thinking about the market action, and Steve Olge talks about, how things start off at the beginning of the month. So we also have to consider what's happened in the beginning of the new year. And you'd have to say that it's been risk on, and really almost everything has been going up. You have crude going up. You have stock indexes going up. You have the dollar going down, which is, similar thing. So you could turn that around and say that you have euro going up. So January, even the metals up until recently, with gold being down here, have also been up in January, right? Started way before it. So overall, you have to say that it's been bullish for almost all asset classes. I would say that the Dixie, which is, going down, is kind of risk on, has been giving up, its gains begrudgingly. So, we had a test of 96. We're coming off. 96 came into play pretty well here, so we'll see what happens. So January, bullish January for almost everything: crude, S&Ps, euro, almost everything in January. So what that makes me think of is not what's happening today, but there's a phenomena that happens in February that used to be called the February break. And since stocks have been commoditized with futures and algos, and correlations for risk on are pretty tight, I think that we're going to have a pretty nasty February. So looking for things to possibly continue until month's end or towards the end of the month, and then I think you're going to have a big break. I know a lot of people are looking for one more low in the S&Ps, as low as 2240. A lot of people have been sitting here waiting for 2600. And, my philosophy is when everyone's waiting for one number, it either doesn't get there or melts through it like butter. So I don't know, why can't we try 2640 or even, 2700 before the big break happens, sometimes by the end of the month? So just an observation and something to keep in mind, and we'll see if that old commodity adage of a February break takes place in the next, after, I think we have about another 3 weeks left in January, so a lot could happen between here and there, but you have to really realize that January has lifted all boats. Tremendous rally in crude. I remember I was trying to buy it before the new year, and we had that one last spike where the S&Ps did this, and crude did the same. So they're pretty tightly correlated. So I would assume that by then crude should be reaching some type of objective on the upside. Short term, actually trying to scalp up here, getting some divergences on the 1 hour. We're making new highs, huge strong day. I don't know why we can't pull back to 49 and then make another attempt towards 54 or wherever eventually it's going to be. But the biggest news of all is this, especially for people that have been in phase for a year and a half or so and haven't really immersed themselves in the community. You have 20% off monthly plans. I know some people have sent me DMs on Twitter wondering if there was going to be a promotion, and I told them that it was going to happen this week. So here you are. So here's our gift to you, to have a discount on, I believe, the best team on the net. I don't think you could find a better team. I've been around for quite some time. I was on FX Street, where you had every trader and analyst wanting to be on there. And, this team, I think, blows them away. So you have this, you have Paulie in the morning giving you a heads up before US opens on the European crossover. You get all types of analysis, Elliott, harmonics, candlestick, macro, basic technical, and really pretty good team. I challenge anyone out there to show that they have a better team. 14 decades, so 140 years of experience. Wow, it's a lot of experience, I would say. 140 years. I think that's before they were even trading FX. Okay, so take advantage of this offer that we have going on here. I don't think that you're going to be disappointed. And then, you have access to all of the research and analysis and active patterns in play. And you also have, access to the chat room after face closes. And there's a lot of great traders in there. You're going to get alerts pushed to your mobile device if you have to be away. You don't have to worry about when you're away that you might miss something, because you could either have your iPad or a mobile phone with you, and you're going to be able to act and not come home and go, WTF happened? What happened? So, our eyes are your eyes too, and we're going to let you know what's happening. So take advantage of this promotional offer. I think it lasts about 7 or 8 days. And looking forward to working with everyone on a full-time basis in ForexAnalytix and our partners. You could get a hold of our sponsors and talk to Trent and Justin. Try and find a broker that's going to give you rebates for your hard work when you're trading. They're a broker of brokers, and they're going to find the best solution for you. There's no law against having more than one FX, stock, futures account. Sometimes you have to have more than one to know which one is going to serve you better. It's not a horse race if you just run a horse by itself. You have to have comparisons. And I'd recommend signing up at least for the semi-annual, because it's my view that you really can't make a good judgment in a month about what someone has to offer. You'll get an idea, but we know that this is a business of cycles, and everyone has a bad month once in a while. Anyone who says that they don't have drawdowns isn't being authentic with you. So if you give it the semi-annual, I think you're going to know in 6 months whether or not you found a place to make your trading home or not. I think a month is just a little bit too short. So just getting back to the markets, looking forward to see what the team has to say. Gold weaker than silver again. So, the gold-silver ratio was pointed out late last year. You have gold down 3. I'm looking at these metals, and they're really not giving up ground, really giving up ground a lot. And silver really is holding up well. I think there's another push up. If you look at this, is something I teach. It was a confirmed high in silver. So I think there's a shot for one more push up, as Steve says, one more squeeze. And I'm going to be very interested to see what the RSI reading will be in here. And you could even say that in gold if you look at the daily. Why can't we tag this trend line one more time? I think even Greg was talking about it. And this trend line is going to come in a little bit above 1300, 1303 or so. And that may be it. So, I'm thinking that the metals still have some time, just like the market may have some time, and then looking for a February break where I think the bears come out of hibernation a little early in February before the spring. And I think February is going to be a month where gravity really takes hold. I think we'll have Isaac Newton markets where the apples fall off the tree. So in the meantime, start looking for where you would want to establish position shorts after January concludes. And in the meantime, just, trade lightly, because I think most of the moves to the upside even if S&Ps trade 2640 or 2650, you know, 2/3 of the move have already been accomplished. So that doesn't mean that you start fading them right away, but it means that you know, you're not as aggressive near the last third or so of the move as you were when no one wanted to touch them. No one wanted to touch crude at $44. Now everyone loves it, right? So even if we're going to 54, you have to, you know, trade it with a lighter hand than you had to do when it was well under 50. So that's my take on what's going on. I want to thank all our subscribers for their support over the last couple of years. And you, like me, have seen the amazing growth of our team here at ForexAnalytix. And I think that it'd be tough to find a more competent team, a team that really, you know, backs each other up if someone's not there, so that you get the best service possible. I think that Paul Franco's a great example of a guy who gets up at 1 in the morning to service our European clients on the European crossover. Came in and he was doing it, you know, had to get up at 4, but it was actually his idea to serve Europeans and even our Asian clients better, since, you know, right now it's pretty late in Australia. So that's just an example of how we put you in front of our own interests, willing to, you know, go the extra mile to provide you with input that's going to add value to what you're trying to accomplish as a trader. And with that being said, I'm going to pass the baton over to Blake and see if he's still being patient with the long side of euro. You need the patience of Job in this trading range market. Are you sleeping, buddy? Or did I do that to you? Was it the euro or me, buddy?
No, it was the euro. Actually, I got out of the euro yesterday. I took it off at like 59. Just because I was like, you know, I had a few things that I had to do yesterday, so I just took it off while I was sitting here. But you know, the euro is still really well bid. I mean, yeah. You know, we were around last night for the Trump speech, and you know, it didn't move the market at all. You know, he basically just, you know, spent a few minutes defending his decision to have this government shutdown, and so it really didn't move the needle at all. The markets didn't do anything, and so you know, I was sitting there ready to pounce, and I was thinking, okay, well, if he's, you know, just talking about the wall, then, you know, it's probably going to be a long drawn out fight regarding you know, the border wall, and that's probably going to keep the government shut down for an extended period of time. And I was thinking, man, you know, the dollar should sell off a little bit, but the dollar yen did not. The dollar yen it stayed almost exactly where we're at. Sorry, I'm tired. I got to bed late because it took me a while to get to bed last night. But the dollar yen actually sat around current prices, didn't go anywhere. The euro sat around. I think it's exactly where it was last night when I was when this all happened. Would be right around here, and so, you know, I'm just not doing anything. I did cover my New Zealand Canadian yesterday. I covered the entire position at 89.27 last night. Yesterday, somewhere around here. Yesterday, right. Now the reason why I covered it, by the way, if you don't know, is that we held the support down here. So I'm like, okay, well, that's it for me for now. I would like to reshort the New Zealand Canadian, and probably will do so later today. And let's talk about today. Matter of fact, let me put out an order here because I need to keep one out just so I have some exposure out here. Okay. Just make sure I have a live order out there, just so I know I need to go revisit it a little bit later. So let's talk about the dollar Canadian, because that's going to be the highlight today. The Bank of Canada meets today. They are actually expected to keep rates unchanged. And the question is going to be, will the Bank of Canada shift towards more of a hawkish tone? And that that will be seen. So we can look into, forward into 2019 and start to price in some rate hikes, which I think the market is already, obviously if you look at what the price action from the last 2 weeks, it's already been the case. We're already pricing some of that in. But and if you haven't noticed, crude is actually rallying. I mean, we have crude oil that is broken above 50. We continue to rally here. Steve had a really great pattern in play, with this inverted head and shoulder pattern on crude. And you can see it right here. He's already been in and out of it, and made really good money in the crude trade. But the reason why the dollar Canadian has been dropping the way it's been dropping is twofold. We've got the the rally in crude oil, which is keeping the Canadian firm, but also the risk of the Bank of Canada turning a little bit more hawkish. Now, a couple things I want to note, just so you guys are aware. The Bank of Canada, you'll see here, their decision is at 8 a.m. Eastern. This is via Forex Factory. If you look on ForexAnalytix here, you go over to our calendar, you'll notice that it is at 8 a.m. My time, which would be 10 a.m. Eastern. Okay, right there, right? Now, the what is not on here and is incorrect on Forex Factory is the Bank of Canada press conference.
Lost you, Blake.
Blake,
yeah,
we lost you, mate.
Well, until he returns, maybe I can say a couple of things.
Sorry,
he's back.
Yeah.
I hit my mute button. Sorry.
Okay.
I just brushed my hand over the mute button and it muted. My bad. So what I was trying to explain here is you'll notice that we have the Bank of Canada rate decision is at 8 a.m. my time, which would be 10 a.m. Eastern. Forex Factory has that the press conference is at 10:15 a.m., which would be 8:15 a.m. my time, which is 10:15 a.m. Eastern. That's not correct. If you go to Bank of Canada, the press conference is actually at 11:15. Okay, so this is an hour. You can see right here, 10 o'clock, 11:15. So it's an hour and 15-minute difference. This is incorrect, and I don't even see it on on the investing.com calendar. It's not even on there. So just be aware that 11:15 a.m. is where you're going to see the Bank of Canada press conference for the rate decision. Okay, I just want everybody to be aware of that, because that's going to be. I mean, obviously, we're going to see a move at 10 a.m. Eastern. I would assume that we see a move there, but Nitish says I have 11:15 as presser for me on Forex Factory. See, I don't see that Forex Factory. They have it at they still have it at 8:15 a.m. So it's interesting. I don't know why it's coming up that way, but anyway, it is going to be at 11:15 regardless. So whatever you guys are thinking, just know that that's because that's what the Bank of Canada has as far as their press conference. This is from the BOC website. Okay, all right. Now going back to the Canadian. So the Canadian, we're at the 50% retracement right now. Now this is a 50% retracement of the October lows. Now this is following the USMCA agreement when that happened. After that, we've been rallying ever since. We're at the 50% retracement, very oversold here. Going into the rate decision, I would be very careful about being on the short side of the US dollar Canadian. Does that necessarily mean you want to be long? I don't agree with that, but I don't know if I'd want to be short heading into the meeting after such a big drop. That, like I said, that doesn't mean that we can't go lower. I mean, if the Bank of Canada actually raised rates, or they signal, we walk away thinking, man, there's going to be 2 or 3 rate hikes going into 2019, we will trade down to 131.20 today. We can do that, but the risk reward is now not in your favor to be on the short side. What I'd rather see is a move back up to this broken trend line, and then be on the short side of the dollar Canadian either later today or tomorrow. That's what I'd rather do. That would be the trade for me, the trade of choice. And I'll wait for it too. And if it doesn't happen, it doesn't happen. And there, for me, what my goal of 2019 is, just so you guys know, my personal goal is being more patient, waiting for the trades to come to me. And it has yielded really good results for me thus far. I've been more patient, waiting around for prices to get where I want them to go to. If they don't get there, then I just move along. I just go on to the next trade. So just
great mentoring, Blake. It's the toughest thing. The waiting is the hardest part. Tom Petty.
It is. Waiting is so tough, especially as a trader. We get accustomed to sitting in front of our computers for hours on end, just looking for something to do, and at certain points you just get frustrated because a market starts to move. Let's just say the
Ronnie, it brings me back to the interview with Ronnie. Ronnie, I think I'm quoting him. You have to be willing to sit there and watch the market for hours and hours and hours and not trade. And most people can't do that, Blake. I have a hard time with it,
They do, because what happens, a couple things happen. You could be sitting there, like, let's just say that, you're sitting here watching the cable, and you're sitting here going, I'm looking to, looking to go long the pound. I'm gonna use something really, really minor here, and you're like, man, I'll tell you what, if the pound gets above this resistance, I'm gonna go long, because that means it's breaking out, and you get long, it breaks out, you get long, you buy it at 127.50 and 56. By the time you get long, it's already reversing, and it gets down to 127.45, and you're just like, screw it, this thing ain't moving. Then you get out, then you get stopped out, and then you just end up losing money, and then you take a bunch of little losses like that. And then by the time you make your solid gain of that trade that you're waiting for, all you did is you made up a bunch of losses, and then you find yourself going nowhere. And that's going to be the issue with, especially if you're active trading, is you can't beat these algorithms, man. You just can't. They're way too fast. If you have some headline comes out and you buy, unless it's a real trend changing type of headline, you hear something, you see a little spike, you buy it, you sell it. Chances are the algorithms have been in and out already before you even hit the button. So by the time you get in and out, you might have lost a little bit, and you just do that 4 or 5 times, and now you're down 50 pips, and then you make that one trade that you've been waiting for, and you make 60 pips, and you go, wow, I just did 6 trades and I made 10 pips out of 6 trades, and I'm going nowhere fast. And it's really tough to make money that way. And that was really the problem for me the end of last year. the problem for the market just in general is that we are just moving sideways. But you can see we're just moving sideways for months on end, especially here in the euro. But for me, I'm just practicing on being a little bit more patient and waiting for those trades to get to where I want them to go, and then take my position in the market and let it move from there and give it a little bit more wiggle, and just exercising that type of patience. And I think if you do that, it's going to be a little bit more helpful for you in this environment, especially in this environment right now. We're not in a rip-roaring environment where volatility is so high and we're seeing 500 pip moves in the FX market on a 2-day basis. We're lucky if we can squeeze out a 50 to 70 pip move intraday, which what that really means for any of us is that it's difficult if you get stuck on the wrong side of a trade. It's difficult to climb out of that hole. So that's just something that I wanted to state. So, like for example, I put in a bid overnight in the euro dollar at 114.25 because my assumption was, since this was the breakout point here, the 618. Okay, this is the breakout point. If the euro would have dipped down here, and we would have got up this morning, and we're just, let's just say for argument's sake, where we're at right now at 114.52, I would have got up with a 25 pip profit with very little risk, because I put in a bid at 25 and I put my stop like at 15 because I figured, well, if it breaks back down below here, it's gone. Did I get triggered? No. But I'm giving you an example of a position that I'm doing more targeted entries. I'm thinking, okay, if the market gets here, I'm going to take a position long or short and put in my stop, and then walk away from that. And I'm doing less intraday trading. And if you're normal in our chat room, and here I'll take you over to our chat room really quick for those of you that don't know. Here's our chat. This is our chat room. That if you're part of the ForexAnalytix community, you guys are, this is you guys are on Jumbotron. That's nice, Oliver. You can see there's about 100 of us in here online right now, but this is where I'm at throughout the course of the day. But if you're in this chat room, you've probably realized I'm not as active as I'd been, maybe towards the end of last year. That's just because I'm not trading a whole lot anymore. I mean, as far as actively, I've been kind of paring back a little bit, and I think that's, it's important to realize that I'm a product of this environment, of this market environment. And so anyway, I just wanted to kind of pay
off in spades, Blake. That's my prediction.
It will. And, there's going to be periods of higher volatility too, where things are just rip roaring. And then you have to kind of change your strategy at that point. I mean, we are going to get to a point where the euro breaks out of this 115 and we rip up to 116, 118, or we break below 113 and we rip down to 110. It's going to happen. And when that happens, I'll be a little bit more active. But when the market is, sideways, you just got to be a little bit more patient in your entries. And that's what I'm really, like I said, that's my goal of 2019, is to, realize that, no FOMO, no fear of missing out. I'm going to, just wait for my levels to get hit, and if they get there, I'm going to get long or short, put in my stop, and then walk away from it. Versus getting excited about every 10 pip movement in the market, which there are a lot of them, and it's been quite frustrating as of late, the last few months. I've already had a great
look at that chart. Look at that chart.
Yeah.
I mean, what a compressed range. That's why I think you're right. Once we come out of it, big moves.
Right. So last thing I want to talk about before I leave, and I pass things over to Steven Stelios. If you guys were even thinking about remotely joining the ForexAnalytix community, this is the time to do it. We offer a special only a couple, 2-3 times a year, especially for those of you looking to get in semi-annual or annual subscriptions to really be part of the community. That's it. We only do it very, very, very infrequently, and so this is one of those times that that we have the New Year offer, and you can see the New Year offer, and it expires January 18th. So take advantage of it and get involved. Don't wait, because if you wait, you may not see another special offer until June, July, maybe for the summer. You know, we might have some sort of offer, and it isn't even that great of a discount, because our best discount is going to be back in September, or in September, when after the long summer vacation. So, or holiday for those of you in Europe. So take advantage of it. You know, this is the time if you've been waiting. All right. With that being said, I'm going to pass it over to my colleague Steve and Stelios. Good morning, guys.
Good morning.
Blake.
Hey guys.
Hello.
Wow, you guys almost sound like a church choir.
It was there was harmony.
All right. Thank you
All
very
right.
much. Blake.
So, how you guys
Andre
doing?
is the harmony guy. I don't know anything about it.
Let's do it. Hello, hello, hello.
Hello. All right.
Oh gosh. Yeah. See, you know, we just had about 15 people actually just log off. Yes.
All
yes.
right.
Anyway,
They're lost. They're
way
lost,
to go,
buddy.
way to go, guys. Way to
They're
go.
lost, buddy.
Says the guy that was actually singing the Smurf song.
I did that because I used to do it for more of an entertainment. You guys are doing it
I
because
know.
you're serious.
And it was amazing. It was amazing, to be honest. I really miss it. You should be doing it more often. That and the Greek God voices.
Yeah, the
Those
Greek.
two.
You know, I've spent enough time in Greek churches to know what
I never heard the Smurf song, Blake. Can I just hear a note or two before you go?
Really?
You know, Dale, I do this because because I specifically want to put something in your head that when it comes in your head, like, you know, you keep folding your socks in your sock drawer a little bit later today, and this song will come in your head, and you'll be like, gosh, damn that Blake Morrow, I hate that guy.
Like youth less leverage. People have had to go to psychiatrists to get that out of their head.
You know,
go ahead, put it in my head.
You know, I just
la
la la la la la la la la la.
Oh boy, that's pretty good.
Yeah,
Yeah.
brutal. See,
All right.
All right.
busted some speakers. Okay, I'm out of here.
That was it.
All right.
Bye, Blaker.
Bye.
Amazing.
You guys have a good one.
What a performance! All
All
right.
right. Steve, before you start, if I can just say a couple of things.
You can say
Say 5.
27 minutes worth of things. If you want.
Okay. Well, Blake talked about the Bank of Canada. I don't really have much to add to that. Now, we had a couple of things happening overnight, or maybe yesterday evening. In the UK, we had an amendment to the finance bill brought on by Theresa May's opposition, basically, which was voted for that, so basically against the government by a very marginal vote, but still it passed. And that, what it does is it actually limits spending on no deal Brexit preparations, unless there's explicit authorization by Parliament. So what does this do? This basically makes the UK less prepared in the case of a no deal Brexit. What the hell is that sound? Oh, it's a trading
Alert.
Yeah, it's trading view alert. Yeah.
That's terrible.
So we need to change that. So
Sounded
that
like
basically it limits preparations and basically funding for preparations for a no deal Brexit. And what that does is it was a way for the opposition to show May that basically they have the upper hand, and you know, this is another defeat by May, so it's not good. Although, you know, in the end, it's supposed to show a message to May that, look, we're not going to take a no deal Brexit, but not preparing adequately for it is not the same as avoiding it, you know. So I'm looking at this, I'm like, how does this actually help? I'm not sure. But anyway, this is definitely not a good development, but it doesn't seem to have really phased the pound. It's you know, broadly unchanged. It's still at 90 against the euro. So that's one thing that happened yesterday. Now the other thing is Donald Trump is talking about going into a state of national emergency over the wall, the Mexico wall, which it sounds like something a politician would say, oh, we're going to go into a state national emergency to try and force things. But really, if you look at the details, I'm no expert in in U.S. Constitution, but from what I understand, if the country is taken to a state of emergency, then a big number of federal laws take effect, which allows basically the president to do a whole lot of stuff without congressional approval. So that, I'm not sure if I'm the only person scared of this, but it really does scare me, this process.
I heard a guy say it would trigger a constitutional crisis if he did that. Exactly what you're talking about, Stel. So yeah, and a lot of those powers were given after 9/11 in the Patriot Act.
Exactly.
So basically you become king, which is something he wants to be anyway.
Yeah, I mean, if you had JFK, I wouldn't mind, but I don't know. Let's not go into politics.
Yeah, I know, because I have friends I talk to, and it's bad territory. But anyway, that's what would happen. Someone said it would lead to a constitutional crisis. The Congress would immediately, because of that, and it would go to the courts and be tied up, but Congress would move to impeach based upon an act like that.
Yeah. Okay. Well, I definitely think this is not a dollar.
Oh, it was Bill Kristol, and he's not a liberal. Okay, Bill Kristol, the journalist. I think he was there with Reagan and Bush, and he's not as they say, a Dem. And that was his comment to what would occur.
Okay. Now, yeah. Okay. So basically, my other comment regarding the dollar is that, aside from that, we've seen the Fed. Obviously, the Fed has switched stance to a much more dovish tone. We had some more comments today. But the interesting thing is that Fed fund futures are now actually pricing. They were pricing a week ago chances of a cut in 2019. Now they're back to something a bit more normal, which is a slight chance of a hike. When I say slight, I mean 4 or 5 basis points. So really, it's a flat curve, but we're not pricing a cut anymore. So that's something interesting to
give it a little bit of time. Give it a little
bit.
Don't you think that's possibly, guys, because of the recovery in equities? That it's changed. I mean, if we were still down there at 20, under 2,400, that it would not have changed.
Of course, it plays a role. Of course, it plays a role. But I also think that a big role was due to the very strong NFP number.
Good point.
It in essence helped many of the people that had jitters about the imminent future of the economy, the chances of an imminent recession, feel quite more confident or comfortable anyhow about the situation. So I think that both of them actually played a role. And as we have seen, since the Fed changed its stance, and I said that the other day, and if you remember, we discussed that with Blake, now the market is actually treating good news as good news and bad news as bad news, meaning that usually now lately, the past few months, when we have good economic news, markets go up, and when we have bad economic news, markets go down, because they understand that, first of all, that the Fed put is not as strong as it used to be with Bernanke, for example. So that's one point. And the second reason being that with, it's more than obvious that the economy is starting to run out of fuel, and it's running on fumes, and it makes sense. I mean, this has already been a 10-year business cycle. So at some point, evidently, it's obviously going to have to go through a recessionary phase. With people worrying about the possibility of a recession, obviously, good economic data, let's say, reduce the chances of that probability, which obviously is market positive in a sense. We have had bear markets without a recession, but and I'm not sure if I'm right about that, but I'm almost certain that we've never had a recession without a bear market. So you get it, Coach, right?
Yeah. Well, the market can forecast something that doesn't happen, but when we have a recession,
exactly, the market is especially when valuations are so rich. how can you possibly have a recession? Because a recession will also mean, companies slicing a lot, earnings, etc. So how can you possibly have a recession without having a bear market? It's impossible.
Steve, I was going to ask you, you're a big proponent about the beginning of the month, and here we are a week or so into the new year. Is it giving you any indications? I mean, some people extrapolate it out for what kind of year we're going to have, but the fact that almost everything has rallied in the first part of January, is there a message in there for you at all?
We'll see about that. I want to see the whole January because it's also the first month. And now, statistically speaking, we've said that multiple times. You have much increased chances of seeing a low or a high at the beginning of a year or at the beginning of a month in comparison to the statistical chance that you would have if that was a random event. So, under a hypothesis that it would be completely random, that would mean that you would find, let's say, a low at the very beginning of the year, let's say the first trading day of the year, 1 out of 300 and 252 times. And they say that because the trading days are actually 252, okay? But it's not the case. So, or for example, at the beginning of the month, which let's say a month has like 20 roughly trading days, that you would have 1 out of 20 to get like at the very first day of the month, like a high or a low. But the chances are much higher than that. That doesn't mean that you should trade just based on that. It's one factor to take into consideration. So that's it.
Thank you, Paul.
Yeah, absolutely. But January usually is quite an important month. I want to see how the rest of January is going to go. For example, I can't really say that the fact that, as you see, for example, both the S&P and crude bottomed at the same day. It was the 26th of December, so it was like 2-3 trading days before the year was actually over. So is that somewhat significant? Yeah, it is. But does that mean that we're not going to go lower? No, it doesn't. Of course, the fact that they bottom at the same time is not a coincidence. You mentioned that indirectly yourself before. Speaking of the crude, by the way, I took profit on the last third of my position earlier today for 14.2% profit. So on average, I made on my position on crude 10.2%, which in essence means that this trade made my quarter already.
Nice, buddy. Congratulations.
Yeah, it was a very good start of the year, obviously, and it takes away a lot of the of the pressure, exactly. And it can help me focus more on what I like to do, which is take it slow and take opportunities that only look good. Regardless, I still have the my other trade, the pound Aussie, which is moving quite nicely. And I wanted, the other day we focused on the 4-hour chart, but even if we go down to the daily chart, you can see that now the pound Aussie is actually threatening what seems potentially to be a recovery channel. Okay, so we're also testing here is the confluence actually of this ascending channel support and the 50 daily moving average. It's the green moving average as you see here. So if we do close below that level, and now we can go back to the 4-hour chart, I think that there's going to be continuation. We're almost at the 50% feed, by the way, of this recovery. So I'm still holding my position. I added yesterday to my position. People that are in the chat room, got both my entries live. So I actually entered this trade initially at 179.50, and then I had an order to go short at a break below 178.50. So now I have an average at 179. So I'm already like 135 pips in the money, and probably I'm going to be moving my stop today above this high. So in the profit. So I have another position that's going nicely. So this is going to be a fine January, as it seems. I'm not eager to jump on things just to jump on things. And I warn you, the reason, by the way, that I closed the rest of my crude was, first of all, because, as I said, it already made my quarter. Second of all, we fulfilled the inverted head and shoulders formation target. That's one thing to consider. And the second one is that potentially, given the fact that on the 4-hour chart we're now overbought, and this looks like an ascending wedge or whatever, we could see at least some kind of a pullback. That doesn't mean that depending on what kind of price action we have when we get a pullback, if I see the pullback being corrective in nature, I won't have a problem at all buying once again crude, because I do think that crude has the potential of squeezing people a lot more. My initial entry was not the entry speed. People in the chat room know that my cost average was at 44. So I can easily jump on it and be able to afford losing some. Depends on from where we pull back. I would be even interested in buying it once again at 49.30. I think 49.30 is a nice area if we get a pullback that's orderly to find some buyers stepping in the market once again. Now, having said that, let's see what else has moved in the market. I have to say that, other than crude, not a lot of things have actually been moving. Having to do with the S&P, by the way, I said it yesterday as well. I sold 1/4 of the S&P, 1/4 of my regular position at the S&P at 25.70. And I'm looking to add higher. I already have an order to sell another 1/4 of a position at 25.97, just below the psychological 2600 area. And I believe that this is actually what I drew a long time ago. That we could have seen a pullback from there and then another push higher. And more or less that's what happened. We didn't pull back so much as I expected, but we are getting this other leg higher. That doesn't mean that it's going to go all the way up to 2630. There is a good chance that we're actually going to stall below 2600. But as long as we stay below 2630, I feel very comfortable to start building a position as I'm doing, being short, because I think the closer we get to 2630, the risk reward becomes extremely appealing to at least see a decent pullback, because this market should at the very least remain cautious. So people that were buying near the lows, I believe that the closer we get to these previous areas of support that now become resistance, are quite likely to try to take some profits. And some people that are bearish and are waiting for another leg lower, for example, as I'm doing, are quite more likely to step in the market. So I do think that we should get between 2600 and 2630. We should get a reaction lower. Now, does that mean that we remove the new lows from there? No, not necessarily. But I think it should be enough to move the market somewhat. So I feel quite confident selling there, and if it works, it does. This is my plan. I had it all along, so I'm going to follow it. And I just know that when I follow my plan, good things happen more frequently than bad things happen, and that's all I can do and all I can look forward to. Now, the Aussie and the Kiwi are still recovering. Actually, having to do with the Aussie, I was looking this as a potential descending wedge here. I also like the fact that we had that spike lower, which actually fulfilled the criteria of one more low that I was looking once we break below this previous low. So it was a spike, but it still made it to the 161.8% extension of the last recovery, which is more than enough for me. So I have to say that it looks quite good. We're currently testing confluence of resistances. You can see this is the 61.8% fib of the last move lower, counting the spike. It's also previous horizontal support resistance area. You can see it has been, it has actually defined two lows back here, and it actually acted as support here, resistance here, etc. So let's see if we're going to get some kind of a reaction from here. But I have to say that the Aussie looks quite healthy at the moment in the short term. So in the short term, I would definitely not try to fade that. That's actually, I also feel, that's also one of the reasons I feel confident holding that pound Aussie short. Kiwi also, as you see, is breaking out from, you can call it an expanding triangle formation. Depends on how you draw it, but it doesn't matter. The most conservative way to draw it was to take into account this trend line as a trend line resistance, and regardless, this is breaking higher today. We are also breaking higher from the 50 daily moving average so far, the 200 DMAs higher, and I have to say that as long as that's the case, I wouldn't be surprised to see another move to the upside. So I do think that the Aussie and the Kiwi, both of them, look quite healthy in the short term. So as I said before, I would not be trying to fade them here. Now, having to do with the pound and the euro, in all honesty, I find no good reason why somebody would want to be trading them. They've stalled, they're boring. Who knows what way they're going to be resolved? I mean, one of them is in a triangle. The other one, depends on if you want to take it into account, this spike or not. If you don't take it into account, this can be another bearish formation, like a bearish channel. If you want to take it into account, it might be something different. But still, even if you look at it like that, the move higher is definitely doesn't inspire. It doesn't have any momentum. And why would you want to mess with headline risk, etc.? So personally, I think that if you're confining yourself in trading 2 or 3 of the majors, for example, this is a great period of time to tell you why you shouldn't be doing that. Because let's say, I know that there are some people, as a fact, that trade like 3 or 4 currency pairs. So now imagine, let's say that you're trading 3, 4 currency pairs, and 2 of them are Euro USD and Pound USD, right? Now that means that you have 2 currency pairs that are actually untradeable at the moment. Unless you're a scalper, they're completely untradeable, and you're going to get yourself in trouble. So I keep I remain of the opinion that monitoring a lot of markets lets you filter out what is really a good technical opportunity and what is really not worth taking, and pushes away the eagerness of trying to be involved with something. And since you don't find something very good to be involved with, then you start contemplating, you start trying to find excuses to yourself to persuade yourself that something that is at best a mediocre opportunity is much better than it initially looks, because you want to get yourself riding the market somehow. So then you find yourself in something that has less chances of playing out than it would have otherwise. Oh, thank you, my friend. Hi, Steve. Happy to see your laryngitis is fixed. Could you please have a look at copper? Oh, yeah, thank you for reminding me, because I actually have this position as well, the copper position, and I totally forgot to mention it. So the good thing is that I booked half of my copper short, near the lows. So, and the rest of it is actually risk-free at the moment. So I have to tell you something. I don't like the fact that we haven't seen much of a follow-through yet. Once we retested this broken triangle, I would have wanted to see a move taking us all the way down to 245, which was my target. 245.5 actually was my limit order. Now, has this breakdown been invalidated? No, it hasn't. It hasn't yet. So I'm gonna stay with the other half of my position. As I said, it doesn't look that good as I would want it to look, but it's a risk-free trade now, since I booked nice profits on my first half. So technically speaking, it's still looking like it can move lower and actually fulfill this target. This is an area that's an area of multiple confluence of supports actually, and keep in mind that a much bigger event is also going to be happening here, because if we actually make it all the way to my target, my triangle's target, at the same time we will have managed to complete the formation of a very, very large head and shoulders formation. And I may add here a very bearish head and shoulders formation, having to do, I mean, all head and shoulders formations once triggered are bearish, but having to do with, now I'm speaking from the perspective of a target. And I'm saying that because let's assume that this is going to happen, and let's measure what that target is going to be. So assuming that that's going to be the case, that would mean that we would have a target down at 1.6 $6, which is like, it would be like a record kind of low. So I have to say that I don't like the fact that the target seems to be very hard to achieve. But that doesn't mean that once we break below there, if we make it and we break below there, you shouldn't be taking into account the head and shoulders formation just because the chances of fulfilling its target are, objectively quite low, right? Because it will still be a technical event. So, and since we went into copper, let's have a brief look at the other metals as well. Palladium keeps pushing higher. We've now tagged the 161.8% fib extension. I was looking to buy palladium once we broke above there. But I have to be very honest, I never expected that, the upside momentum is going to be that strong. So I set 3 times a different target, a different pullback target to get, to get into the market on the long side. Every single time the market never, decided to pull back enough for me to get triggered. On one hand, I regret it because I really believe that we're going to go higher once we break above there. On the other hand, I don't regret being more conservative because this is my style. And since that works for me, it's a bummer, but that's how it is. Sometimes, you manage to get in a trade. Sometimes you don't. I could have jumped on board, by being more aggressive. But then if I ended up losing money because of that, I would have blamed myself for not following my plan. And I know that I would probably be more angry by, not following my plan and losing money than by following my plan and not making money in something that I saw happening. So, it is what it is. Now, would I be buying up here? No, I wouldn't. Of course, I said the same thing here, right, at 1267. But, it still applies because let's assume I would be buying up there. Okay, where would I put my stop loss? So it's purely a matter of, I need to see this market giving me a good enough pullback to find a trade that has a risk-reward ratio that makes sense. So, it is what it is. Let's hope we're going to get that. Now, if we don't, we don't. Platinum, a nice rebound from here. I expected lower, as I had said, because this looked like a triangle. It surprised me by the fact that it jumped higher. Of course, it's not a surprise given the fact that all the other metals are rebounding. So, at the very best, even the most bearish scenario would be probably that platinum would stay put, consolidating even further. Definitely it remains the most bearish of all the metals. There's no question about it. I mean, if you go back and you see platinum used to trade at higher prices than gold did, and now it's at a big discount and still underperforms by far. Now, silver, both silver, I said that yesterday about silver actually, but today it starts looking like it's the case for gold as well. I said yesterday that I would be more bearish with that rejection we had with gold if the price action in silver didn't look 100% corrective. But now, after having another day, that's the wrong chart. This is the correct chart. You can see that even if you have a look at gold, gold also looks like it has corrected price action. If we go down to a 4-hour chart, actually, you're going to see that this potentially can be a triangle in gold. So gold doesn't look that bad either. So I would have to say that both silver and gold look like they want to push higher at least once more before.
Greg was saying last Friday, I think he was here, something about that you needed 7s. So he was talking about one pullback and then another push up as well before it's a good sale. Do you remember that?
And yeah, absolutely. And you know something?
Yeah.
And you'll completely understand what I'm saying. Grega is an amazing Elliott waves analyst and trader, because there are people that are analysts, people that are traders, people that are both. Grega is both. Okay, but
I interviewed a technical analyst early in the week.
So,
Mr. TA.
No comment. So,
anyway.
So what I want to say though is the following, and I do follow Elliott waves as well, but if it's one thing that I learned is that as much as I respect Grega and I know that he's more frequently right than wrong, a lot more frequently right than wrong. There's no question about it. I take decisions based on my own analysis. Now, if Greg agrees with what I'm seeing, I feel even better. You understand what I mean?
I sure do.
Yeah, but I wouldn't take a trade just because, Greg sees that it's
anyone.
Anyone. It doesn't have to do with Greg. I mean, I'm giving Greg as an example because you know how much I respect him and I know that he's good, obviously, right? So, and that's what we want to teach to people that are in Forex analytics as well. Sure, you can jump on board, copy our educational patterns in play and do good because they're doing very good. But we would rather you come join us, see how we trade, learn how to become better traders, learn how to have more confidence in what you're doing, become profitable, and then spend time with us, exchanging opinions, and just feeling and just getting more ideas, feeling more confident so you can press more with what you think is happening in the markets if you see that we agree with that.
You know how they do that, Steve, when they coattail trades and stuff? If they know the why of the trade, then they have learned something new that they'll be able to use the rest of their trading career. You have to know the whys behind the trade, not just if the trade works or not.
Exactly. We're happy to join us when you don't know how the markets work. We're very happy because if you have the persistence and you're willing to put the work, you will learn a lot faster. But what we consider success is having the quality of people that we have in the chat room, many of which are excellent traders, that they're not there because they wouldn't be profitable otherwise. They're there because they know that they come in contact with more ideas. They can feel more confident with their ideas when they agree with us. They get to see some things that they would have missed otherwise. That's when we feel even more good, more complete about us having done our jobs properly. Because more than anything, we like to see ourselves as educators. That's why we're going to be giving a lot of emphasis in the education part as well. Within the next few months, we're going to be releasing the video store, which is going to have a lot of educational content. And we're also going to give the ability to people to get personal mentoring from, the vast majority of us. Because we really want, Blake used to say that in the morning, every time in his show, is that the curve of the successful traders against the non-successful is looking really nasty, and if we can improve that somewhat, it's really a pleasure.
Okay, buddy. I know I learn from the team every day, and I do learn from you every day. I get nuggets every day. In fact, a couple of my mentees were asking for your Twitter handle today because, your reviews of the board and your trades, you're definitely part of my intelligence gathering. Like you said, Greg is of yours.
Yeah, absolutely. Absolutely. Blake the same. Stelios the same. Stelios, Stelios is our macro guy. And if you see how successful his trading ideas are, and sometimes how successful his timing is, you're going to be amazed. Of course, it's not by accident that he used to trade billions for big banks. I mean, the guy doesn't just know macro. I mean, he's been in the markets, he's done that, etc. But I mean, I also learn from them every single day. I learn from their successes. I also learn from their mistakes. Because when you see a person that that it's excellent, do a mistake, you learn even more from that. First of all, you learn humility. You learn and understand that even the most successful traders will keep on doing mistakes, until the end of time, right?
Amen.
Exactly.
I still do it.
We all still do it.
Yeah. And we even have someone who's a real pro that I'm sure gets stopped out once in a while. Lydia Finkley is here with us for her first 2019 appearance.
And I'm sure it's not going to be the last.
Huh?
And I'm sure it's not going to be the last.
No, Lydia's a regular. And
I know.
We don't have a lot of them, but she's definitely one of them. So
absolutely.
So without further ado, thank you, Steve, Stel, Blake, Lydia. Welcome back. Happy New Year, my trading warrior sister, and I'm passing you the baton. Look forward to speaking with you and seeing what's on your radar.
Good morning. Hey, Dale.
Look at the green thumb you have. Look at those plants. They're thriving. They must take Juice Plus. Huh?
You know,
Great.
this is actually in my car, so it goes with me everywhere.
Oh, okay. Well, thank you so much for being here. I hope you had a great holiday season, and what a great time to have you on, Lydia. Before we get to the charts, and there's your 2019 outlook. So interesting to have a macro view, but looks like we have D-Day, unless it's canceled next Tuesday. Any guesses about the scenario that might happen with the UK Parliament next Tuesday if it happens?
Let's see.
Yeah, I know. Okay.
They've given us every single possible scenario. I mean, honestly, my guess is that everything is pushed till March. It just seems like most of this posturing has just been kicking the can down the road. So I wouldn't be surprised. Whatever happens on Tuesday, it wouldn't be a surprise. I think a likely scenario, though, is that it's kicked to, until March. The closer we get to March, we start to see people really show their hand.
It's at the drop dead date where the referendum had to be executed by March. There's no chance for delay after that.
Right.
Interesting.
At least as it stands now.
Okay. So I just read a little bit of your 2019 outlook, and you give plenty of reasons why it's not going to be a bullish year for sterling. And, we've had the dollar come off and equities rally. Everything kind of, all boats are lifted. Even the pound, which was under pressure, is higher in January. So let's talk about your yearly scenario. Do you think it's possible? You're talking about 50% back from what, 145 and 121 back towards 137 as a possibility and as a short?
This one, actually, from 132 or 133.
Okay.
That 124 low.
Right.
So we have this stair step. Yeah, I think that I think a lot of us probably, let me see, I took profits higher than I would have liked to, and then we got this New Year's Eve drop, and it was this this absorption of bids here at the lows that had me because I really thought we were going to go higher the day, like the week before, on this candle here, and go higher, and then we got this drop, and then all these bids came in, or they were absorbed, they were waiting, and really I think even as we're toying with this major support now resistance level, I think we're going to come into 128.60, and I wouldn't even be surprised, like I said in the outlook, that we come as high as the 61.8, because we get so close. As we get closer to 130, you start to see people say, you start to see the market turn bullish. You start to see traders rather turn bullish, because 130 is such an important psychological level for the pound. So I think it gets interesting as we start to see what happens on this rally. But yes, I do think, I agree. I think that we'll see dollar weakness, and a lot of that is going to be as the market tries to position or try to price in interest rate hikes versus cuts this year, and what the Fed is going to do in that respect. And I think we'll see the dollar come off because of that.
Okay, and the dollar, seems to be at least breaking down for a correction, but it seems to be giving it up so grudgingly. So it makes me kind of go with what you're saying, is that this pullback in the dollar, pound, euro, all the majors is not going to be real deep, and that despite what people are hoping that the Fed does nothing or becomes neutral, and even they're pricing in a cut, makes me think that when the market doesn't gain ground when it should have, like how the metals have outperformed even with a steady dollar, that there's some type of undercurrent big bid on long dollar, even though a lot of people are already long the dollar.
Yeah, and I agree with that, because even as we're seeing this dollar weakness, we're still below 127.75 in the pound dollar. I know in the euro, people are looking for a move above 115, and
Right.
So we're not seeing this dollar weakness take off, even with the scenario with a possible interest rate cut starting to be priced into the market. We're not seeing equities take off on that kind of news either. And maybe for the equity markets, it's more waiting for earnings seasons to pass, now that FedEx and Apple in particular have spooked everybody into what earnings might look like coming out of December and out of 2018. So I agree with that. I'm trying to be really, really patient in taking a short in the pound dollar, because I do think we can see a move higher, and at least into the 50% retracement level before taking a move downward.
Okay, so why don't we move to a couple of the crosses, Lydia? I still think, Euro pound has been pretty interesting. We've stalled at, last week we stalled at the high that we had in May without, on my platform, taking the stops out. But I still remain constructive on it, thinking they are going to break out over next week's highs. Maybe it pulls back a bit more towards 88.5 or so. Is your view that we should be looking for continued outperformance of the euro against cable for a bit longer?
Yeah, I do think so. So on the outlook that I wrote up, I talk about this consolidation, this 2-year consolidation period that has stayed above this support level. But most importantly, to me, it's never reached these fibs. And so that in and of itself is really a bullish sign long term for the euro pound. And if we just, look a little deeper here, I think this is better seen on the 4-hour chart.
See, it's interesting. Your platform took out the May high that high that we had there. So the stop hunt happened. Okay.
Yeah,
right.
I mean, it's one of those. It's like the euro pound. I'm sorry, like the pound dollar low at 119.50. Some people have 119. Some people have said 118. So it's those kind of flash crashes.
Yeah. Yeah. How do you handle those as a technician? I've been asking people. Do you ignore the wick in your trading and just focus on the body of it and the bodies going forward? How do you integrate those spikes into your work?
I've gotten that question a lot. So I actually use the spike. So my opinion on that is that if the market reaches those price levels, it's relevant. And I know there can be some debate back and forth with more computers and algorithms in the markets these days. But my contention is that if the market is making those prices, that it's something we should be paying attention to. But even more so is the reaction to the levels. So when we have these long wicks, we see all these offers get absorbed in the market. It shouldn't have been surprising, or it wasn't, at least to me, that we got a dip back into support, or not even a dip, a reversal back into support. So it's really that reaction. We take out these highs, but then how does the candle close after reaching those levels? We see the same thing here. I incorporate. So you see my fibs. I use the entire.
Okay. So bias to the upside doesn't mean that it's going to be from 89.5 though. Could it work lower and still be a buy, say like 89, 88.5? What would be your line in the sand for saying that the EG is topped?
Yeah. That it's topped out? Oh.
Yeah, that it doesn't have a bullish case anymore.
Yeah, it would be a sustained move below 88.50.
Okay.
I actually thought that before we got this move higher, we were getting these failed highs. So we got this one spike into 38.2, which was a great move for the euro pound, and we're starting to move higher. And it started to look like we're going to get these failed highs. I was positioned for a move lower into 88.50 until New Year's Eve, until that New Year.
Happy New Year.
Yeah.
Happy New Year.
You know what I mean?
No matter where your stop is, the algos are going to take it out, so you better have lots of booze around for New Year's Eve. But I think that was
stop even too, because stop even would have gotten you you would have got a loss with the stop even.
Yeah, I mean what they did to the Aussie and what they did to the yen. So why don't we go to the guppy, since the yen was really the most affected by that bear rate.
Oh yeah, the yen was. So I think last time we spoke too, I said, it seemed, I don't know when it would happen, but I want to see a break of the 61.8 and we'd see a return back into 130, and that move did just that. But I was looking at it. I was looking at it from here. And we don't see these kind of moves, but this move is actually right to the 261.8 level. And when you look at the fib extensions, and that level is typically where we're going to see kind of this reversal. So again, it's the same thing. It's like you see all these bids step in on a move like this, and it's no wonder that we're seeing all of this, really most of that just completely reversed across the board here. But I think
I'd like to validate that you were negative, Guppy, last time we were on. I don't remember. When was it? November? Something like that, Lydia. So that was a great call. And I know a lot of it had to do not as much with your bearish view of cable, but your bearish view of yen. US dollar yen.
Or bullish view of the yen.
Right.
We started talking about risk aversion starting to come into the markets.
Right.
And that was right before equities dipped, or do we say crash?
Yeah, worst December since 31, and I know you have a lot of people in cash, so kudos on that too. All right, a lot of my teammates and partners here at ForexAnalytix have been making hay with the cable against commodity currencies. So why don't we move on to that?
Okay. So I'll just taking a look at the Canadian dollar, because we're going to hear from the Bank of Canada later this morning, and the market is rightfully positioned for a bullish, or I should say a hawkish sentiment coming out of the BOC. But I wonder if this could be a position for weakness, because really this is range bound. We got this spike high, and this was kind of that same move. This is New Year's Eve and all of that. And we saw the Canadian dollar really weaken, along with other risk assets. So we're getting this move completely lower, and all of this is positioning ahead of the Bank of Canada. And really, we're moving to the bottom of this range. It would have been great to see it lower. I would have liked to take in a long here against support, but not here ahead of, is still a kind of a ways away, especially
if it was down there ahead of the BOC, would you take a position ahead of the BOC, or do you stand up? You do take positions on red events like that.
Yes, I do.
The level is more important to you. The level is more important to you than any news that comes out.
Yes.
Okay.
Yep. Use your risk appropriately. And it's when we get uncertain events like parliament votes or those kind of things. But when we get like central banks, when their announcements hit, their policies are come out, we get really nice swift moves. And then it's when the pressers come out, and when they start doing press conference, it's the jawboning that gives us those those kind of whipsaw events. But I'm more of a technician, and so if we were against levels, I have no problem stepping in front of something unless I'm not really certain how that event would go, So and if our markets haven't been very clear, this one is a clear range to me. So if we were at the bottom of the range, I just would take it. I would take it long, but not here.
Okay, so let me ask you, I think part of that move was crude, big move up in crude that we've had since, they flushed at New Year's Eve too, or maybe it was Christmas and it's come back big. So if crude begins to correct its advance, would you expect a recovery here on Cable Canada?
Oh yeah, I think that would definitely support it.
Okay.
Yeah, that would definitely support it. And it's one of the reasons why this thing has been range bound. So when you see the pound weaken against most things in a trend, we're seeing the commodity dollars really remaining range bound. They're not getting any of that traction. And so these have been, if you're not trading these in a range bound, these are not trending markets yet.
Okay. And how about our Aussie and Kiwi allies over there?
Yeah, so yeah, the Australian dollar.
Right. Yeah.
Yeah, spiked. And that's kind of our Chinese proxy, so it really reacted because of that. And so look at here, it's completely reversed all of that. It's breaking the 618, which signals a move lower. So again, we're getting that's that pound trend coming into play. But when you see any news coming out of China, you see anything around commodities, especially iron or the metals, you want to be aware that we're going to see Australian dollar tend to weaken in those events, but those offers are going to step in because, this in particular is against the pound. And there is still, like I said, there's still a lot of dovishness when it comes to the pound. And so people I find markets are just always positioned to short the pound on any kind of rally.
Okay, and how about Aussie? There are some people saying that we put in a major low in Aussie, and if that happens to be the case, how do you play this pairing? That Aussie is entering isn't just a bear market rally, but it could be the beginning of a secular trend to the upside. How would you trade this?
Yeah, and a trend development like that really supports the pound Aussie in particular because it's it goes with the weak pound. So I would I like this break right now happening here, and I would position to really short any rallies that are coming into 8207. Actually, the better thing I would put if this starts to turn higher, put a fib on this downward move and see where you get a position to short.
Yeah, because sometimes on those wicks, what I've noticed over the years is that it could fill in, not necessarily take it out, but work into it, kind of like a gap. To me, it's almost like a gap. And the most bearish thing it could do is rally into it, but not take out the high of the wick.
Right.
So, you could almost treat these things like gaps and appreciate that. Any other cable-related instrument you want to talk about?
We can just take a quick look at the Kiwi. The Kiwi is kind of muted compared to all the action we've seen in the other pairs. I found this one to be, range bound in particular after we got this nice move, and this is a move since October though. So it's really since the last month of the year, we're just moving between support and resistance levels. We're coming here and found offers, and this looks like we'll just move lower into 82. And so but this is a nice, this is a nice range. This is about 700 pips. So
a muted 700-point range. I don't know about you, Lydia, but I actually prefer lower beta muted action trades now than the wild spikes. Yeah. The wild spikes, and that's why it's been I've kind of gravitated away from trading stock indexes after the first break. So why don't we go to what the good work that you do? Oh, now that I look at this, maybe we get a right shoulder at 186 or so on a pullback. That looks interesting. You see the left shoulder in November, and maybe we get a right shoulder here. So you're a mentor, you're an RIA, and you also write great things. I mean, we had an example of it right here. So why don't you describe what you do and what your mission is?
Thank you. So I started working with traders a couple of years ago, and you can find that here under Learn with Lydia. So everything, go to faithmightfx.com, you get my writings. I recently had an associate join me, and he does a lot of great writing on more stocks, kind of diversify the coverage on the blog now. And yeah, if you're looking for more traditional advisory services or asset management, you can look at Invest with Lydia. That will take you to the firm website. It'll give you a little bit blurb here, but then you can click forward into the firm website and see how our services are priced there. We're really meant to be a low cost and flat fee advisory firm to allow those of us who typically have traditionally been priced out of these services to gain these services. And with that, I think a lot of folks feel like you have to invest on your own. You have to know how to do this by yourself. And I just think that's a false paradigm that needs to be broken. Yeah, we all have to trade with someone. And you were just discussing it before I came on, how, you have intelligence gathering and you work with other traders and other investors. We all need to do that. And those of us who tend to go at it alone, that's the success that's just not how this game is played. I think you're best served when you're working with the team. And I think it's important to always consider having, if not a team of traders like this community, but having an advisor who can take a look at your long-term holdings as well.
Well, Lydia, I consider you part of the team, and we've been talking to each other for quite some time now. And every time you're here, I get some ideas. So I really appreciate you and everything you try and do for others. And your mission is really a great one. And I hope 2019, everything you're doing multiplies and expands and grows like a mushroom, and have a great trading year. I know that we'll be in touch several times this year. Thank you. Thank you for every time you come into our community and edify us, Lydia, my trading warrior sister.
Thank you so much for always inviting me back on. And yeah, a great year of trading to you and everyone out there. And as always, I see you on Twitter.
Okay. Adios, Lydia. Thank you so much. Everyone, that's a wrap for us today. See everyone tomorrow. Remember, don't just count your pips, count your blessings. Adios. And see you for investing.com Thursday. Good hunting. Thanks, Lydia.
Thank you.